Good morning. 8:05 and change, the 26th of August, 2024. A Monday. So, a few bits of housekeeping here. The purpose of the stream is my virtual journal. I narrate so that I am able to hear what I was thinking, and obviously the video, I can see what I was looking at. If it, at some point it might help somebody else, that's fine, but it is my virtual journal, and I have made a commitment not to take any trades on this account off stream. I stream up to YouTube so that I can review these on different devices or whatever. And yeah, I think that's kind of covers it there. The overnight session here, we only have one number out this morning at 7:30, so it's long gone. That was the durable goods. And then we have the Atlanta Fed GDP now. It says it's only a 2-star event, but that's at 9:30. The durable goods was not a qualifier for my strategy that I've been wanting to try out for the evaluation pass. So let's move on to the numbers here. This is the full session ETH, the ES U4 contract. This is a Renko chart, and you'll see that the overnight has been pretty much just a rotational yeehaw back and forth. We are looking to be, well, or just I hate this kind of days where it's just a few ticks within the in or out of range. This is the market profile chart. This is the similar Renko NQ, and this is my micro composite chart, which is for the ES, which are just daily RTH bars. And whenever price is overlapping, like here, I draw a volume profile around them, which then produces the micro composite VPOC. These little green lines here are pushed from IRT to bookmap. They're the high volume nodes in that column. These price levels here are all pushed to bookmap, and they are then I enter manually these probability statistics for each of those levels to be hit or touched within this in this open type configuration. Now, the open type is like any something that's statistically significant. It only has two parameters, and that is the location of the expected RTH open, which is up here somewhere, as it relates to the previous RTH close and the previous RTH range. That's it. So we have then a statistic study, or I have a statistic study, which is this. So there's only 4 open types: open higher out of range, higher in range, lower in range, lower out of range. Okay. Again, it's the relationship of the open of the upcoming or expected open of the RTH period, the upcoming RTH period, as it relates to the previous RTH period close and range. Right now, we are 1 tick in range, and we are higher than the previous close. So that is the expected open type, depending on what they do here in the next 10 minutes or so. The study looks at 2,004 days. Of these 2,004 days, 595 of those days opened higher in range. That's 29.7%. Of these 595 days, this is the percentage of time that the upcoming RTH price revisited the overnight VPOC, 83.2% of the time, or 495 days. So, and the same goes, the same probability calculation goes for each one of these. So it's 83.2. I then go back over here to Bookmap, and here is the overnight VPOC. So 83.2. Bam, that's it. The previous overnight high, 74.8. The problem is I'm not going to continue to enter all of these because, and the overnight mid is usually it's usually the second highest probability, and in this case, it's 77.8% of the time. I'm not going to enter them all. Oops, what am I doing here? Because here's the previous RTH high. So right now we have just crossed over into the higher out of range column. So those would change these statistics a bit. So I'm not going to knock myself out doing that until we get closer to the open and I decide whether it's going to be higher in or higher out of range. I think I'll go with higher in range just because it's irritating. But here we are back and forth, The differences in those statistics would be this is higher out of range. This is higher in range. So the overnight VPOC higher in range is 83.2%, and it's 79.2% higher out of range. So 3% different, I don't guess it's earth shaking, but we are extremely high to the close to the ETH high and the MC high, which was the previous high of a couple of days ago. So, I also put a NVPOC or naked volume point of control down here next to the previous RTH volume point of control. Now, the minute the RTH period opens, this is going to move, but I want to know where that naked volume point of control was, because it is the point of control of the last RTH in the most recent RTH auction. And I should probably show you that over here, which is right here. I flagged this like that. Now, a word about the levels and the charts and stuff. In columns. This is the high time frame column where I manually enter the things from the micro composite. This is the high volume node where those green lines from the micro composite are pushed from Bookmap, from IRT to Bookmap. This is the full session volume profile, which is started at 1700 last night. This is the RTH volume profile from previous, which will reset at 0830. Cumulative delta for this one. Chart volume profile only plots what data you see on the chart. This is, I've already explained this column is just for my notes and where I, enter the statistics, and I will flag the migrating VPOC and stuff like that. And these are the price levels which are pushed from IRT directly to Bookmap. I don't have any indicators on my charts. I have levels. So this is the full session VPOC. It's a darker yellow, and you'll see that it's right here. These numbers are not mysterious or magical. The POC is just the price at which the most contracts have traded so far in the session. That's all. When this price down here becomes higher than this price up here, this line, yellow line, is going to move down there. Very simple. The VWAP is the volume weighted average price, and I calculate one for the ETH and the RTH. The middle of the RTH period, I don't bother with the full session. The green lines here, which you can't see the flags for, maybe if I roll down here, we can find one out. Yeah, here you go. The IB high and low, are just the high and low of the first 1 hour of the RTH trading session. Nothing more, nothing less. IB stands for initial balance. It's an old market profile term. And that's it. So I have IB, I have VWAP, I have points of control. And then these lines, I have an indicator which draws a line at each of the price levels, which is just my own easier for me to keep in the forefront. I don't overlook one. I see that green line. I know that there's an IB coming up there somewhere. The levels here in the heat map are representative of the resting liquidity in the book. This bracketing algorithm comes on about 10 minutes to 7 every day, and it's just annoying. I've talked about that quite a bit, so I'm not going to do it again today. At what do we got here? 11:45, say 12. Try to keep my things in stock here. And I don't know whether he's got these price things all organized or not, but I have a hard time keeping these timestamps organized. So at 20 past the hour every day, I make a post to the TLab, and that post is this chart, which just gives those folks that don't have YRT a leg up with all the different levels. This is a full session and overnight session, and naked volume point or naked points of control and all the levels up here. And the TLab is a bookmap Discord chat room started by a guy named Tom B, who I believe is probably one of the only real deals around on the internet, and it's the only person I would recommend anybody go listen to or join or sit in on the chat room. First of all, it's completely free. You don't have to be a subscriber to Bookmap to be, to join that or to join the TLab. Tom has got nothing to sell. He's not pimping you to buy some indicator or be a mentor or any of that bullshit like all the rest of these people do on the internet. And for that reason, I think he's probably the real deal. He's been trading professionally, his own account for 45 years, very successfully. He was a professional Series 7 and money manager, stuff like that early on in his career. But so I think he is the real deal, and it is he has the same similar. We share a similar philosophy. I guess I should put it that way. So there's a link to that Bookmap Discord server in the description here, and I recommend going to the TLab by Tom B. Traders Lab, it's called, and there's no charge. It's all free. You don't even have to be a subscriber to Bookmap, which is pretty cool. I'm going to have this post here in a minute. Also very important to make sure that we have the trading enabled, this is a 2-lot risk neutral package. Both lots have a 12 tick stop. The first target is 12 ticks positive, and then the runner. Once you've achieved the first scale, the worst that can possibly happen is a scratch, unless you're a moron and you move your stop away from entry. Now I'm going to make that post quickly to the TLab, and then I'll get right back to the business at hand here of the was talking about. Okay, there we go. All right. So the next thing that you have to do after you've enabled your trading profile is you have to turn on or make sure that the trade control panel is activated. I initiate my trades with a keyboard. And so I use the DOM only rather than chart or both. And I'll explain why. If you see this little column here designated by this very faint line, and this, you'll notice that this is where price is moving. This is called the live data, and this is historical. The mouse changes to a $sign. The mouse is a plain big arrow. If you have chart or both selected, and you click over here anywhere, you've sent a trade, whether you intended to or not. And I've done that before, trying to move a target or trail my stop up, for example. So what I learned the hard way was to select DOM only. So I initiate with a keyboard. Damn it. I initiate with a keyboard. Let me start that over. This is the live data column. This is historical. I go DOM only rather than chart or both. And so I initiate with a keyboard, and then I intentionally can manipulate my targets and stops here on the DOM and not accidentally enter another trade in the live data column. Sorry, I had the wrong screen showing there, but yeah, that's where that's at. And I guess. Another part of my risk management or trade plan is that you remember the first scale is 3 points positive. Okay. I must have an unobstructed path to the first scale to have a valid entry. If, for example, the price was here, or let's go up here. Price was up here. It's now 63.5, say 64. And I wanted to target the VPOC, impossible, because there is the developing value area high, the previous RTH high, and the green line indicates that that's a previous IB high. Those are all in the way getting down to 61, which is where the RVPOC is. Even if they weren't there, it would be a dicey call because it's just exactly 3 points to the target, never mind the scale. So there's not really the risk reward for that to put on a trade at that location in my trade plan as I have it so far. Now we're very definitely going to open higher out of range, I would guess. This is something I can do that. Why isn't that showing up? Oh, yeah, it is. Okay. This is something else that you might want to. I only do this for my personal benefit. When I make a screen snap of this thing, which I do for every trade and stuff like that, or go back and review the stream, I can just glance up here and see, oh, that was the open type. There we are, right? And now that means I've got to go back over here and change the higher out of range. So the POC is 79.2 instead of 83.2. So it's 79.2. See why I didn't do that? The ETH high, previous ETH high is 63.9. Be pretty quick here. 63.9. What else did I put in there in the mid? Probably, I guess. In the overnight mid, somewhere, there's 63.5. So now we are going to, and then of course they're going to bring it right down and be back in range again. I'm sticking with higher out of range, to hell with it. The stats are more conservative, and so that's going to be good for me. The IB low, the previous close is 47.1. That's right there. And I'm sure the overnight low is a Pretty funny. Overnight low is 34%. So 34%. Yeah. Previous high. I thought I put that in there, but maybe not. 63.9. And that's how the statistics are put in Bookmap, and they come from the IRT chart, IRT study, and they are associated. I put them in this column alongside next to the price level which they are associated to. And they are not fixed targets. They are ideas or suggestions, or I don't know what you call it, but that's what they are. And obviously, based on the percentage, there is a pretty high probability that, for example, the overnight volume point of control is going to be taken out. Next down the list is the mid, and now in the higher outer range, the overnight mid becomes less of a probability, right? The ETH high becomes a greater probability than the but only by a couple of ticks in the mid. So that's how that works. And okay, that gets me pretty much up to date. What I will do as soon as the market opens is change my IRT charting from the full session to the to the regular session. I've talked about range requirement. Yeah, okay, so we're going to have the open here in 3 minutes. At which time I will start to flag the the VPOC movement. So, and I do that just like this, a template that you'll see these flags start to come in there, like that. Boom. And what that means is that's where the VPOC is. So it's obvious that this yellow brick road, the yellow line, will continue to draw, but as the market and the day progresses, those points scroll off to the left. So it's easy to just have a one quick view of where we were, where is price now in relationship to a previous volume point of control. Both IRT and Bookmap track with this yellow line the developing volume point of control, and in IRT, where it is currently is this red line, but they both track that, but it's simpler for me to just see those flags. I try to make it as easy as I can. Okay. After we get the open out of the way here, I will talk about trading as a business and my philosophy around that, and it kind of aligns with the TLab. So, so that's what am I doing here? There we go. So we're going to open here in a minute. You'll notice when we do, these columns will reset. I don't know if I mentioned it early on, but all of my times on my charting or that I speak of is Central Standard Time. So here we go, boys and girls. Bam, there's the open. There's a reset. There's the first volume point of control. I can't put the flag there because it's right at the previous high. So that 63 point is out. The overnight volume point of control stat is done. Here is that first flag. Well, it will be as soon as I get the click to work, right? There we go. There's the first flag. And I will continue to put those in there as this. You notice that the current or the RTH VPOC is a bright yellow, and the full session VPOC is a darker, more muted yellow. Maybe that's a bad choice on my part, but that's what I did. So Yeah, so we've taken out, well, we really haven't. Real close to taking out this overnight high. It looks like about a tick shy, to be honest with you. But yeah, it is a tick shy. See the high here? There's the overnight high. So that would be likely going to be gone here in the blink of an eye. We'll see. And what am I doing wrong or something else? I've got you on the right window. That's a big step in the right direction. Okay, I need to get my water bottle filled up and a bio break. And so here's our swing high, swing low, just kind of chopping around here. And be right back. Well, there we go. So we had a definite push to the upside. Excuse me. Better change those charts around now. Boom. Boom. Excuse me. Oh, we're opening above that yesterday's high, but under the micro. I know we've crossed over the micro composite high now, according to the charting. So we had a slight pullback, and now we're trading way up. I would kind of guess that they're going to let this get a little bit longer and then hammer them, but never know. And here we have 8 points. So we got about a 9-point range so far this morning. And here we start the VPOC migration higher. What does that mean? That means that they're accepting price higher and that the value is moving up. That, remember, by definition, is the price at which the most contracts have traded. So right up here, and you'll notice that the volume point of control is quite erratic in the beginning because it takes so few contracts to change, right? Here's 1145 and here's 1271. Well, in another 100 contracts or 120 contracts, this VOC is going to move down here. Or, pick a level, anyone. And that's even better yet down here. It's 1247 and there's 1271. So in 35 contracts, it can move right back down here again. And there it's just moved. It's just shifted there. So that's, you kind of got to take that. You have to be aware of the time of the market. Here's the more muted POC for the full session, and here is the brighter POC. Or it doesn't want to show the name. Here's a more brighter one for the for the RTH session. The VWAP and the mid. Remember, those are the only 3 indicators on here. The rest are price levels, which are not any kind of an indicator. They are, in fact, price levels. Remember that the IB high and the IB low are only the high and low of the first 1 hour of the RTH session, period. So many people try to make such, mysterious bullshit out of all this stuff. And I'm not saying it's easy or that it's not important, but what I am saying is it's not mysterious or mystical or some secret knowledge that I'm going to sell you or anybody is going to sell you. They are just matter of fact, mathematical or statistical prices, levels, and that's it. And not pivot points and all those kind of esoteric things. These are absolute price levels. One other thing to mention is the value area high as it differs from developing value area high or low. The developing value area high and low is that for the current session. The value area high and low is the recorded level from the previous RTH. And value area is just between value area high and value area low, or the value area is where 70% of the contracts have traded so far in the session, period. So the POC is the point of control where the price at which the most contracts have traded, and the developing value area high and the developing value area low are where 70%, or it's actually 67.8 or something like that, but everybody just sets their charts, which I have done, to 70% so that the lines agree. Because people on other places like TLab, the levels are different. So, okay, what the hell's the difference for 0.2%? I don't think it matters. Yeah, there you go. So we've rotated. We haven't extended the high yet. We're looking at about a 9-10 point range, a little less than 10 points, and pretty much rotational, which would be, I think the proper term is open auction. They're auctioning the price, right? Here's our open. They auctioned up, they auctioned down, they auctioned up. Now it's a little too tight. Remember my 3-point requirement to the first scale doesn't exist anyplace. Here's 67, here's 69. Even if you tried to sell that high, with the VPOC migration, so you were talking about the mean reversion, which is that wouldn't qualify. And also it wouldn't qualify because this is a distribution. This is outside in, and this is another one. And here we are with the VPOC migration. So, yeah, the best thing for me to do in a situation like this is stand by. And say we'll go with I guess it's a good time to talk about trading as a business plan, and as opposed to gambling or a video game. And the reality is that trading is a business of statistics and probabilities. Successful professional trading as a business is one of statistics and probabilities. That's not just me saying that, some little old guy on the internet here. That is Jim Simmons, Ray Dalio, recognized authors like Mark Douglas and countless others. Citadel, Knight, that's how they all function. And the difference between why so many retail traders crap out 95 or something percent is they don't understand that. And they trade it like a video game, or they try to predict where price is going to go. And that's not the way it works. It's a business of statistics and probabilities. That's the secret sauce. And how you enact that business is you identify a potential setup and the specific criteria and trigger for that setup, whatever that may be. Pick one. Let's say VPOC migration as an example, okay? When the VPOC migrates, that's pretty obvious. The big yellow line moved around, the yellow brick road, right? When it migrates down, okay, that is the initial setup, and then the criteria is do you have to establish this. Do you let it pull back, trade back down, come back up, whatever, however you determine those parameters to justify or to validate the entry. Then you capture a minimum sample size of at least 50 of those trades. With that, they have to have the exact criteria. You can't have one with 5-tick stop and one with a 20-tick stop and one with a, whatever different targets or scales, because then you're not comparing apples and apples. After you've achieved at least 50 samples of that, or captured 50 samples of that trade and that specific setup, you analyze it mathematically and determine if it has a positive edge or not. If it does, you do all of this off hours, by the way, off trading hours. If it does have a positive edge, you then take every example of that trade that presents itself in the live market. And the law of large numbers will manifest that percentage of edge to your bank account. There are drawdowns that will happen, and depending on the risk-reward ratio that you have, those drawdowns, number of losing trades in a row can be substantial. Same with winning trades in a row, but the number of losing trades or drawdown is what's, everybody's focus is on mostly. And, depending on, and that's an inverse curve. So if you have a risk-reward ratio of 1-to-1, the probability of a number of those in a row are 50-50, right? But if you have a risk-reward ratio of 5-to-1 or 6-to-1, that inverse curve means it goes like this. So as the number of trades, as the risk-reward ratio varies from 1-to-1 to 10-to-1, the probability of losses in a row goes out like this, inversely. So it's an inverse relationship. So you identify that trade, and then you take every one of them. And that is trading as a business. And if it sounds familiar, it's the exact business model of the gaming industry from the point of view of a casino. In other words, to run a successful, profitable, consistently profitable trading business, you become the house. And the way you do that is you only play games, because, any casino will only play games which they have identified a positive edge. And they have identified a specific set of rules. And their only mission in life is to trade or deal as many hands at 21 as they possibly can. And that law of large numbers will manifest that percentage edge that they have established to their bank. And it's pretty obvious who's making the money in a casino town, right? So, and they know very well that gamblers will win, and they'll walk out the door with a suitcase full of money, and they don't shoot the dealer. The pit boss doesn't run over and change all the rules. They just say, congratulations, Friedel, here, have a cocktail, and they deal the next hand. And that is the true business of trading, the business of statistics and probability. And you identify a specific setup or game with that, and with rules and criteria and and determine if it has a specific, a positive edge or probability or expectancy, whatever term you want to use. If it does, then your mission as a trader is to take every one of those setups that presents itself. Thinking backwards, then you have to come up with some ideas, in my opinion, like, okay, one of the first criteria, besides just this yellow line flopping around here, is that you have align with the context of the market, both intraday and interday. In my opinion, if we have a string of up days, and the day is, the context of the specific day is up, then I'm not going to want to be taking shorts, right? That those short trades would not be valid for me to take because they would be counter rotational. So that's how I believe you approach it, and that's not just I didn't dream that up. That is a philosophy or a principle shared by some of the most successful hedge fund and trading operations in the world. And I'm talking billions of dollars. Jim Simmons averaged 60+% in return the entire time Renaissance Technology was operational, I think, and retired a multi-billionaire. So I think he's now passed away, by the way. But and he only hired mathematicians. He himself was a mathematician. Only hired mathematicians, and they built it strictly. They used a Markov chain, Monte Carlo, for a lot of their probability testing, and that's really the holy grail. So there you go. Now you know the holy grail of trading. I didn't say it's easy. And I'm struggling with teaching myself Python and all kinds of stuff at this moment to actually really be able to vet or, identify those trades with specific context that I feel are appropriate to trade. And the reason I'm doing this Python and all this stuff is, you can't take it in the real market. If you tried to catch 50 examples of the exact same setup, in other words, the context of the long-term higher time frame context is up, context of the day is up, VPOC migration is whatever it is in relationship to whatever your rules are, in relationship to the VWAP, in relationship to the open or the previous close. All of those details that factor into your specific trade, all the criteria that factors into your specific trade setup and trigger have to happen. Well, if you tried to wait for 50 of those in a row, it could be 2 years, right? So the idea of my idea with Python is being able to backtest a large data set. And I realize, future, past performance isn't indicative of future results and all that stuff. I realize that, but I think it's much more efficient to try to establish a setup or identify and properly vet a setup that way than trying to capture in the real market. I won't live long enough. So that's my opinion of business as trading as a business. That's my belief, and I'm sure that it's correct because there are enough shining examples in the real world of that. And the people that are trying to get you to trade it like a, seat of the pants and, I can predict and all these other kinds of stuff are the people that are wanting you to crap out so you buy another combine or whatever it is, or evaluation, whatever it is. Another thing that's a real advantage I forgot to mention about trading as a business and only trading setups which you have statistically evaluated to have a positive edge is it eliminates the surprise and expectation from trading. because you know exactly the criteria and the initial setup and the criteria that validates that, you can anticipate it well before it happens. Taking again the example of the VPOC migration. The VPOC migration happens here. So, okay, now, does it meet my criteria? So, okay, let's pretend my criteria is that it trades away, pulls back up through, comes back, touches again, whatever. That's pretty, random. But anyways, let's say that that's my criteria. Now I know I am perfectly ready and expecting this trade to become valid and to put on the trade. It's not a surprise. It's not a mystery. And I know that it's a random market and that the outcome of the very next trade is 50-50. Case closed. That is absolutely it. So there's no way are you ever trying to predict where the market's going. You anticipate it. You have done the best you can to vet a trade and have all the criteria that you need and the sample size of data. And then when those criteria are met, you enter the trade. And you're not right, you're not wrong. It's probabilities. 50-50. You will be 50%, it's a 50-50 probability that the next trade will be a winner or a loser. So you try to shift or skew that edge in your favor the best you can. That's the whole idea of determining the criteria and the setup, is to skew the edge or give yourself as much edge as you can in a 50-50 random market, knowing full well that the outcome of the next one is 50-50. So that eliminates guilt and, I'm a loser and, I was wrong. You're not trying to predict anything. What you're proud of is that you followed your plan and those criteria specifically, which you've identified, and then you put the trade on. That's it. That's it. And I'm struggling to do that. The VPOC migration is a vetted trade supposedly in TLab by a number of people, but it's a structured trade by Tom. But he's never shared whether he's his vetting, his data, or anything like that, and that's his business whether he does that or not. But I can't get my head around it because it's so. I guess it's appealing because it's so obvious. How the hell can you miss where this yellow line is flopping around, right? So it's real obvious that the setup has presented, and it's the criteria around it that I haven't been able to get my head around specifically. And I have, by the trades that I've taken based on that, I've lost more than I've gained. Now, right here, okay, it migrated back down. We tested up. Now we did, but you see here, okay, so here's 61, 63 would have just been right up to, and a knuckle biter for the scratch or for the stop out. And also, from my point of view, there's no possible way I could enter that. I got all these levels in the way. So there's no way that there's the 3-point range criteria to the first scale. I think you see my point. Now you notice how the IB high has remained in place, and now the IB low has been extended down a little bit. So that, remember that that's just the low and high of the first 1 hour of the RTH session. I think I got to look at my other computer and see if I've got a meeting on at 9 or not. There's usually one, but special week, so I do or not. Let me just check. I'm not trading this today, so I'm not expecting any special trading thing today, so we'll see what's up. the dock station crashed and a whole bunch of crap happened here. Let's see here. Well, there is a, it says there's one, but I don't know. Let's see here. It says it's still on, but I don't know whether it's not. I guess I can. I guess I could do that and see where I'm going here. I can at least poke my nose in there and see if anybody's around. Okay, I've got the OBS, Teams, Outlook. Yeah, baby. All right. Yeah. Now, here is a, here's an interesting, if I get the right mouse and right keyboard. So we traded down to the IB low, back up to the VWAP. In other words, we've been outside, in. Essentially outside, in. Rotational trade is basically mean reversion, and that is the predominant trading day. The rotational trading day is a high, I don't have the percentage, so I shouldn't say this, but has a very high percentage in relationship to a trend day. The percentage of days which are trend days are very low compared to rotational or auction, open auction days. So there's that. Oh, shit. Oh, God damn. I'm having a collapse here. My mice are flying off the table. I'm doing all kinds of things I don't want to do. Set later. I don't want to have edge be anything. Okay. Now we're going around the corner here too. I got to get this figured out sometime. This chapter thing. Yeah. Okay, there's that. Now, did I enter a trade or do something stupid somewhere over here? I don't think so. Too many screens, too many mice, too many keyboards. Okay, so that'll be open in an hour, in a minute, I guess. Go over there and see if anybody signed up. Which means I'll move my headset across. So yeah, I'll be back in a flash. All right, so here we go now. We have the IB is now set, which means that the let me get this timestamp figured out. Right keyboard. Oh, one. Let me see. Yeah, so the IB is now set. Somewhere around here, I've got the IB 30 statistics, and it is a okay. The IB stats are that. First of all, the IB sets at 9:30. As I said, it's a higher low of the first 1 hour. So as of right here, this was the IB low, and it will no longer move. We've now taken out the IB low and extended it down to the overnight low, which is not quite right. Almost to that lower statistic, which is probably the least expected. We did take out the previous NVPOC too also, but this IB stat says it's not really tradable, but it says the following. Well, actually, I can show you the following. It's a statistic, and it is right here. So let's say this was higher at a range, okay? The IB high or low is the highest statistic. That is 97.3% of the time, or 504 days out of 518 days. The IB high or low is taken out, revisited by price. Okay, so this statistic was just set right here. It's 9:30. It's past 9:30, and we've taken out the IB low. Go back over here a minute, and the more perhaps applicable one is the IB high. Where did the IB low go? Is it not even there? Oh, yeah, here we are. So, but here's a more telling tale, right? 63% of the time the IB high would be taken out, and 58% of the time the IB low would be taken out. And in this case, we have just taken out the IB low. So there you go. And you can see that very specifically here that we've traded up. The context of the day is now, in my opinion, down. And we've taken out the IB low. We are below VWAP, we're below mid, we're below the VPOC, and we've taken out the IB low. The context is definitely lower lows and lower highs. We have basically got 3, maybe 4 distributions, a big one here and a big one down here. So that's the context is lower. We have the micro composite VPOC, which is right here at 56 and a quarter, just below us, right? And this is the highest time frame volume profile. Yeah, so there we go. So that might be a statistic that I would want to look at. Something along as for vetting a trade, something along the lines of if we are lower, if we're below VWAP mid and POC, that would suggest down context and make the likelihood of the IB low more likely. I don't make much sense. And many times, not many times, but several times in recent memory, we've traded right down to here and then gone up and taken out the IB high. So again, nothing is set in stone. The market is random. The outcome of the next trade is 50-50. But if someone was trading, for example, well, that wouldn't work. This test up here to the developing value area low and wherever that is, the close, previous close, that might have been a reasonable short. There was the range. You could essentially say that it was exhaustion because you had, 134 out or whatever it is up here, an iceberg, 4, test up to 4, and then not really any sellers either, but no real buyers, not getting any traction above developing value area higher than previous close. So that would have been a legitimate short targeting the IB low, and there was range 50 to 54. There was a 3-point range. So that entry would have been a qualified one, I guess. Qualified entry. I didn't take it, but it would have been. All right. Okay. Seems like I got everything pretty much up to speed. Yeah. And we continue to sell off. Now we've got the value area low below. What would be our targets down here? There's the previous RTH low, and that's got to be a statistic here. Let's have a look at that. Previous POC. Previous low is 11.8%. Wow. So the probability of price taking out this low for the opening higher in range, come on. Oh, that doesn't want to be very nice. Is 11.8%. Wow. So does that say we will not go down there? Absolutely not. And if you look at this so far, this context. Now we traded right down, worth noting, right down to within a couple of ticks of the previous value area low, right there. So we basically opened gap up. Oh, that's actually gap rules, to be honest about it. But this wasn't much of a gap. But the gap rules say that if you close the gap early on in the market and you get accepted in value, previous value, extremely high probability you'll trade across that value. And that's exactly what they did. So I'll put that up a little bit. So here's our open, just, a couple of ticks out of range. They closed the gap right here. They traded down into here and got accepted into value and then sold it straight across value to within a handful of ticks. That is an old market profile version of gap rule, as I remember them. Okay. There we go. Where am I now? Okay, so why does it say I have 5 emails and I don't see any? I don't know where the hell these emails are that I'm supposedly. Oh, here we go. Maybe here. Maybe this is it. I don't know. Okay, so that's. Where's the other one? There we go. Super. Okay, got them all done. Emails in my Outlook, it says I got unread ones and I can't find them. So that was there's a further IB stat while we're on the subject here, I guess. That is the IB 30 and the IB 60. Further explanation about that. The original stat, as I was talking about and showed the statistics from that study, is that and it's, as you know, it is a fact that the IB doesn't set until 9:30 or 9:30 Central Standard Time. Okay, first 1 hour of trade in the RTH period. So these continue to move up and down. Down, low goes lower, high goes higher. Boom. Now there is another statistic that a fellow in the TLab named Rod, who's pretty clever coder and worker with statistics and Python, which is kind of what motivated me to start picking up Python, is he determined that there's a equally, not 98%, but in the 90, I believe it's low 90s, it could be high 80% probability, and I haven't done it obviously, so I'm, don't hold me to this, but there is a high probability that the high or low of the first 30 minutes of the RTH period is exceeded one way or the other in the second 30 minutes. So that nomenclature has been kind of amended to be the IB 30, which is that one which says the IB, that the high or low of the first 30 minutes is extended by the high or low of the second 30 minutes. And then the IB 60 is the old original IB statistic. So there you go. And now I got to wind this out so I can get some perspective here. I find that I've got to have this wound out at least to where I have these grid marks in here, so that I get a perspective for market movement. Otherwise, it's just too jammed up. And these are 2 ticks increments here. 50 cents, 2 ticks. How are we going to look at it? That 34% ETH low was taken out. all other statistics have been taken out, up and down, except I think, no. Yeah. I believe they've all fallen except that 11 something percent previous low. Now, do you short this ETH low test right here at the is this a get on, pull back, even though there's consolidation and a zipper forming here below this low volume node? Don't know. Well, let's see now. What are they going to do? I have no vetted trade here. And one of the things, I guess the fact, until I get these statistics working and figure out Python, my trading practice is going to be patience. which is not exactly any fun. June 21st, huh? Okay. We have one of those VPOC migrations I've been talking about here. Boop. 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 Okay, so what do we got? Well, I don't know if I can wind it up far enough. Okay, here we go. So we migrated. See if we got any. We had this little dipsy doodle at the open. We sat on it right out through 10, and now we've migrated down. Is this test of the VPOC migration? You see, here's the question. This is an obvious setup. How could you miss the yellow brick road? Can't. But the real meat and potatoes comes from the context and the setup up to the setup and the trigger, or the qualifying context to the setup and the trigger. And that's what I've not been able to identify properly with this VPOC migration trade. Taking it mechanically, I know from very definitely doesn't work. You know, right here. Boom, there's your mechanical take. Or even when you pull away from it, there's 65 and there's 40. So you're now underwater, stopped out, and all upset with yourself. And we go through the ETH low. Are we going to get up here to the IB and test this again? Are we going to do what Tom likes to refer to as a price check at L3, come all the way back up here and see if this is too high? That would be pretty unexpected on my part, because we got to get through mid VWAP, these mid VWAP, close a whole bunch of stuff right here, including these icebergs. I don't know what, I got no clue what this is going to do. I would be sort of, I guess, no, I wouldn't. Yeah, actually, we've got this consolidation right here, which is right here, this fractal or whatever you want to call it. And here's, so we got this low volume node, but there's not enough range to this, to between here and here for the trade. So obviously I'd love to figure out the way to have this VPOC migration be a trade, a validated trade or vetted trade setup, because it's so obvious. There's no, there is no gray area about the migration of the volume point of control. So if I could come up with the proper association of qualifying context and trigger, that would be great. In the meantime, I'll try to figure out why this Python code isn't working. Yeah, so this test up to the ETH low, or this level here, would have just barely had the 3-point range to scale, but it's gone past that. So that could have been a validated short. But yeah, didn't quite get to this low volume node up here, which is suspicious. This is not really the outside in. This is, anyway. It's also really valid. I mean, really important for me to try to keep this stupid thing going here. A comment about breakouts, right? So I realize that breakout is a valid trade system, trade plan for some people. It was, made millions of dollars for Richard Dennis's the famous turtles. But for me specifically, I classify breakout trade as an error. And I have several error codes, FOMO, execution, breakout. Because for me, it is an example I've noticed psychologically. It's like fear missing out or chasing kind of a thing. So I flag those. I have different tags for all the trade setups that I try to use a lot, most of the time. And, mean reversion balance, mean reversion trend, mean reversion rotational, that kind of thing. And in the case of the breakout, I look at that as an error. And so I try to never take breakouts, like right here, for example. Another aspect of them, if you're looking to play a breakout, where is your stop going to go? Smack dab assuming that you use a similar trade plan as I do, which is 12 tick stop. That means your stop is smack dab in the middle of all this traffic, which in my mind has a higher probability of being hit. Certainly trading from the middle out around the VPOC does. If you took a breakout down here, 3 points up, you're right on the POC. Well, you deserve what you're going to get. Unless you've got a trade plan and a big enough account that you're going to take this breakout and put your stop above the swing high, which is 10 points or, 8. That's not in my trade plan. So that's, that's why I look at it as an error. Just, a side note, but, and I found myself, one of the reasons I have been real focused on that is I found myself in the last few months kind of ending up kind of taking those breakouts. And so I realized two things. Number one, when they work, that's probably the most deleterious to being a good trader, because that, anytime you make a mistake and it works out, or you make an error and it works out, that's real bad news, because it's reinforcing a negative thing. Second of all, I noticed that they were, had a real low win rate. So, and I was often getting stopped out. So all in all, I definitely flag them as an error. It's just like taking the middle, trading the middle out is also an error. That's, trading from here outside, that's an error. Trading from the outside in, that's a mean reversion trade, and that's viable or valid. Just barely here, 3 points, only to the VPOC, which would just be the scale. So, yeah. These kind of runs, when you look back and see them, I call it RMT, rear view mirror trading, right? We tested up here and it came back up, and here's my trigger, and I took this long. This is the stock and trade of internet gurus. They look back, any person basically aware of the fact that, the way the market moves, if you sell up here and you buy down here, that it's profitable, or the other way around, can look at this chart in rear view mirror. I call it RMT trading, rear view mirror trading, and be a wizard. But get over here on the hard right edge and tell me what you think now. That's where trading really is, where it really comes down. And that's the part why I am so adamant about the fact that statistically qualifying or vetting. I'll be happy to get one that's got a good edge, and then see how that works. I'm not interested in algorithmic trading, because I believe that I would want to have some degree of discretion. But I guess the next step to that is the people who are doing algorithmic trading, say, well, I coded all this in and I'm relying on the average numbers. I guess my problem would be that I, at this point in my coding career and whatever else, I don't have the skills to be as specific as I believe a setup to be properly validated needs to be. It's not the setup. The setup is falling off a log simple. It's the context and the trigger around that to qualify. That's the most important and the most difficult part, I think, for me. I can quickly assess in the heartbeat whether we're below VWAP, below mid, below VPOC, whatever, which way is the context. But to code all that up in a meaningful way for each setup, it would take me for a long time at this point. I tried to use IRT, which has some good trading tools and backtesting tools. Comes out with a real detailed report, how many trades, profitability, loss, all that kind of stuff. But it's just, I am not proficient enough with it, or I can't seem to get proficient enough with it to. My goal is not to become a goddamn code warrior. My goal is to become to identify vetted trades, right? That's like that's the goal. And one of my personality problems is that when I see a challenge like that, I end up so far down in a rabbit hole, with Python programming, or, for example, coding with Python, that what am I here for? Why am I down in this hole? Oh yeah, I was going to try to figure out how I wanted to vet this particular setup. Well, so I need to be careful about that. And I'm at the point where I find somebody that knows how to do it well. I would just as soon say, code this up for me exactly like this. And I can read code good enough well enough to understand if the parameters that they put in are correct, right? Yeah, so that's the idea, is to I want to get, just like I've identified a couple of very, a guy who has a very comprehensive VWAP, or mean reversion study, which, or trading system, which is, one of the most prevalent, and why I was interested in it. Very well coded up. Everything works really great. And then I get that code from him and I input it into my Juniper lab, or Jupyter lab, and it won't run because Pandas has depreciated in 1.4.4. They depreciated the append term or function, and now, or whatever it is, append. And in 2.2, it's eliminated. So you can't use that anymore. And that's a substantial part of his algorithmic buy sell module. So I'm, spend all weekend jacking around with coming up with a workaround for that. Whether it's the concate or whatever, that they recommend. And that's not my goal. My goal was to just run that, tweak that code of his to fit my needs for mean reversion from whatever, and that's here I am in the rabbit hole. But I can visually look at it and say, okay, when we're down here, we're near the outside edge. It's a low volume node. We do have stops below here, so there's fuel. That's a risk. But when we get down here, we're in a low volume area. Now, I'm not suggesting this because our context today is down. So here you go, right? I can easily recommend that recognize context is down and know that I don't want to be long. So, but just as hypothetically, I can see that this is an outside edge, and here's the volume point of control. And in my trading world, because I focus my trading around the volume profile, I want to go from outside in, and that's the mean reversion. Well, sounds so simple and easy to say, but to code that all up, for me, at this point, is difficult. And the mean reversion deal that I was talking about earlier, that has the errors in the depreciated and now eliminated end function or step or whatever you call it, class, whatever. He's using an EMA. He's using an EMA for the mean and Bollinger Bands for the standard deviation from the mean. When we're talking about mean reversion in volume profile, it's got nothing to do with standard deviation unless it's a coincidence. This outside edge up to this POC got anything to do with standard deviation. And the mean in this case is the POC, volume POC. So that's the part. I'm going to actually contact that guy and see if I can just cut to the chase and have him whip something together. And in my opinion, something like that's worth paying for because, I ain't getting any younger. I enjoy coding and learning new things, but I just have to be so aware of the fact that I'm going to end up in a rabbit hole doing something that I didn't mean to do. It is not my goal to be a proficient Python coder. It is my goal to be a proficient trader, following my business model of only trading every instance of a structurally, statistically significant verified edge around a setup. And that's exactly how I feel. Yeah. Boom, there you are. Yeah. Sorry, I had that sitting over there under that speaker. And the Tom B at the Traders Lab streams every day from 10:30 to about 12, I think. Just on YouTube and in the Discord room. He posts a link there and every day does that. A lot of it is look back, rear view mirror stuff. So a lot of good commentary, but for me, it would be more meaningful if it were, real-time data, real-time price action. I find that more informative, shall we say, to be able to narrate along and interpret along. As I mentioned a minute ago, my young Vietnamese daughter can look back at a chart and sound like an internet guru. So I'm not sure that skill is. I guess I should say I don't appreciate that as much as I appreciate real time in the moment, actual live trading. Pretty much. Well, we're trading down here and testing the low. Now, there's several different concepts about what to do with multiple lows. Actually, it's not a low. The low was put in earlier. Right here. But we are pretty damn close to it right over there. The conflicting theories are, okay, it's like beating on the bottom of a barrel. You keep pounding on the bottom of a barrel or a bucket, pretty soon you knock a hole in it and down you go. The other idea is support, the old support and resistance concept. That's support, and then they're going to trade away from that. And one of the things that I find good about Bookmap is looking at these stops and icebergs and absorption, or the green guys here, or the red ones up here with this funny kind of little flag. Looks like a sailboat. So what's happening here now? Well, there you go. We broke through this developing value area low, and we've taken out all the stops that we're building up down here below these guys trying to pick the bottom. Once again, that's not a trade for me because that is a breakout. So you put a trade on right here. Pick what here, right here that is. Every one of these you stopped out in order to catch, a couple of points. So it's just no. Now, does this qualify as an outside in? It's definitely outside. They've taken out the stops. So if they get over the developing value area low, likelihood is that they'll trade back up to the mean revert. The problem that I would have at this point here is that it is not in my context. I would not be going long in this market because of the context to me is short, right? So I don't know what. Yeah, so it's working. You see that that mean reversion trade is it paying out? Well, if you took this, two problems with this mean reversion trade. Where's the trigger? Bam, sell run down. Now they ran out of 421 stops out right here. They didn't test back again, and that might be the trigger. The trigger might be here in that they didn't get it. Well, what happened? This little guy right over here. You know, nothing happened there. They only got two out here, and we got buyers coming in. So you hit into that, and now you're buying in here at 29, say 30. Okay, so 33 is your scale. So you're okay. And now you're looking for your mean reversion up here or higher. The only problem for me is that it's not in context. Here's the context of the day. So for me, I'm not saying this is right or wrong, but for me, I think that a long is counter trend, intraday time frame trend, which is down context, counter context. I don't know if that's even a word. So I wouldn't be looking at a long, but rather these pullbacks to get on a short, I think is the more prudent way to trade that day, this day. And you don't want to be shorting up here because of what I mentioned a few minutes ago. Where's your stop going to be? Right on the POC. Well, if you've ever invited and stopped out, that's the way to do it. Absolutely. That is the way to do it. I don't think it's possible to stress enough how I feel about what do we got here? 46. The importance of entry location, anticipate trades in a random market as it relates to the stops, and that's what I've just got through talking about. That's another reason why I believe that statistically verifying or vetting a particular setup is so important. As I mentioned early on in the stream, you anticipate the trade rather than a surprise, right? It's not a surprise. You anticipate it. You see when the setup starts, you anticipate and you mentally recognize when the context satisfy the trade and you put on the trade. So real important. And part of that recognition is, and part of that qualification is, where's your stop going to go? That's goddamn huge. That's a big deal. So up here could have been a short. It's not a level. It's kind of outer space. and it's pretty close to that VPOC. So I don't think that's valid either. Here we go with some more of this. And any of these, the psychological part of breakouts, that emotion or that hide, that fear of missing out or fear of FOMO, are real, very real emotions, chemically triggered stuff in your brain and your body. The key to another aspect of having a vetted trades is that you have a logical path to resist those things. Those reactionary things like FOMO and all that. I mean, I fortunately don't, very seldom do I fall into the FOMO trap or over, risk revenge trading or something like that. But I'll tell you, it gets damn boring, and I start to wonder what the hell I'm doing when I stand here for, from 6 in the morning till the market closes every day and don't take a trade, for several days in a row in a week, because I don't have a vetted trade and it hasn't come to one that I'm even close with. And I see something like what's happening now, and I'm thinking, well, shit, there's almost 10 points. Up here is 10 points, but that's, the range is not there. It's trading around the VPOC. It's all of those things I've been talking about that are conflicting for sure. And that emotional crap will never go away. That's part of your wiring from history. So, but being able to recognize those things and not act on them is very doable and must be doable. That's survival. Survival. Wow. I hear thunder out there. That's fantastic. Get that temperature down. That'll be great. I'm not sure the lightning nearby is such a wonderful thing, but all my machines and monitors are on UPS and arrestor stuff, and I hope for the best. And when you look at a day like this and you think, well, you dumb shit, why didn't you just What were you thinking? Why didn't you short up here? You know, any one of these VPOC migrations short essentially was a huge winning trade with no heat. But again, that's rearview mirror trading. And who's to say that right here or right here are not going to be another 50 points south? But this is the hard right edge, just as it is here. Just as it is here. Now, you know, meanwhile back to the Python madness, I guess. This is bottom fishing, right? And were we in a rotational day, this would be, I wouldn't take these as a mean reversion trade because I would want to see the stops come out below this level again, as they did up here when this value area low was up here, if you recall, with all these lows along here. And then bam, the stops went out and then they brought it back up. So I would want to see a similar stop run here and then an exhaustion. We kind of have a form of exhaustion right here where we got 50 stops out, 150, 50, 1, and now look, now 19. But again, also remember that this is the micro composite volume point of control. And we're bumping right up on it now. A much more likely target. And well, it's only 2 points. So yeah, much more likely that we hit this area here, 25. And you notice this big liquidity laying here, even big enough to overshadow this bracketing moron. So that's important to note. And I can't tell you anything much more frustrating than to look over at this Breakout chart and think, oh, geez, short. First of all, you need to understand that shorting is my preference because I've kind of recognized or something that, the market takes the steps up and jumps out the window down, or however the old saying goes. And there's all this short stuff. And I've not taken any trade at all. So very frustrating. But I am consoled in the fact that, or I find solace in the fact that I haven't FOMO'd in or something else, and I'm sticking to my guns here. As far as I don't have a vetted trade, I don't see something that's I'm not going to take along. I'm not going to trade from the VWAP out and all this kind of stuff. Right? Rules. Those are the kind of rules that would be, I think, would be real challenging to program in. Not for somebody that knows how to code. I guess you sit and do that in an hour. But for me, I worked for all day yesterday and could never get the the append to concate figured out. To the point that I'm almost ready to depreciate the pandas back to 1.4.4 where that append did work and then see if the code works. I'm not sure the ramifications of that, so I didn't do it. But after several hours of battling with it, I, thought, well, if it worked in this version, well, then why not just use that version? And apparently you can use different versions of pandas and in the same Jupyter Lab environment. So I don't know. Hearing noises. I keep setting my headset down there, not muting the mic. I'm sorry. I'm not trying to intentionally share or broadcast Tom's stream. This how my desk is set up. And I don't think and set my headset down to go to bio break or whatever. You can certainly partake in. I would suggest going to the Traders Lab, and or you can also go listen to his daily stream on YouTube. He doesn't leave them up, and you can't look at it again. But the link to the Traders Lab and stuff, the Bookmap Discord server or sign up is in the description here. And then you go to, once you're signed up to that, you go to the Traders Lab by a guy named Tom B like Bravo. There you go. Well. Nelly Bell. So we've traded through value from Friday, cross it all the way. And now we're just hovering around, kissing that 25, which is right there. That 25 level is right there, and that's the volume micro composite VPOC today. And stop and think about this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Maybe this guy's little pullback, RTH days in a row. The market, as Tom's one of his favorite problem is the market goes up to go down and goes down to go up. And that's obviously a reality because futures is a zero-sum game, right? So for every buyer, there's a seller. And for every seller, there's a buyer. And so there can be no such thing as overbought or oversold. And, you know, if a bunch of retail guys are buying, who are they buying from? High time frame. And those high time frame people are selling to the buyers. So how does that time frame guy make money? He buys back lower. In other words, he pulls the market down and hits the stops of all the guys he's been selling to, all the longs that he's been selling to, and that's where he makes his money, or vice versa. That's the trick, or not trick, but that's pretty much the high time frame movement in the market. So that's substantially different than stocks, for example, where there are, you know, a company has a float of stock and people can buy or sell and they're borrowing the shares to sell, and, you know, it's not from somebody else. There can be a situation where a stock can be overbought or oversold, but not in futures. And, you know, Forex or some of that crap is just, or Bitcoin or whatever, it's just complete hocus pocus. I mean, they make their own market. There's no centralized exchange. There's no anything, you know. Ask the people who lost millions with FTX. I had the occasion once to be involved or have the peek behind the curtain at the back end of a large FX broker. When I lived in Malaysia for about 11 years. And there was a big FX broker that was based there. And that platform that everybody uses, the trade FX and stuff, I forget the name of it now. Jesus, what a rig. Talk about a rig deal. Holy crap. That's the name of that thing. That's going to drive me crazy now. If I don't think of things, I'm getting old enough to where if I don't think of things often or talk about them often, then it takes me a while to think about them and they immediately pop in my mind. But micro starts with an M. Forget what it's called. Damn it! Now I don't see it. Anyway, they had a. The broker gets a back end tool from that company, and they can do anything they want. They can slow your trades down. They can put you in a different trading tier. They can control whether you're profitable or not. It's an electronic, extremely efficient version of an electronic bucket shop. It's really amazing. MT4 or whatever that's called, MT5. I don't know what that's. MT, I think. MT4, MT, I think. Yeah, MT5, MT4, but I don't know what MT. I forget what MT stands for. Anyway, neither here nor there, but MetaTrader. Yeah. Yeah, that is what I saw was the rig deal of the century there. Was just incredible. And on top of the fact that there's no centralized exchange means there's no book, means there's no real market. They're taking the opposite side of your trade. That's just everywhere you look every place you look at that market is just really, really unfair, I think. I settle on futures because I think it's about as close as you can get to a transparent, regulated market. And there are obviously a lot of spoofing going on. What's all this, bracketed algo crap about? I've gone on about that before, but I think it's probably the fairest deal with probably the best possibility for a favorable edge that you can find. And I think the NYSE, SA, and NASDAQ is just bullshit too. The market makers see the whole book, see all your orders, and you can't see anything else. How can that be even remotely fair? They know exactly where the stops are. They know exactly where to run everything. It's crap. So this is, I think, really fair. Anyway, that's my spiel on that one. And of course, if you're on the right side of that deal, if you're one of the buddies of the broker or whatever, and they're giving you all the wins and the big profits for advertising or whatever, then that's a different deal, I guess. If you're on the side of the team that cheats, I guess it's a good deal. Oh yeah, what are we going to do now? Well, Brad would say we're putting in a zipper here and here and here. Zipper meaning consolidation, referring to the way these wrinkle bars look like the teeth of a zipper, kind of. Sometimes much more pronounced than that. But it's consolidation, right? They're building this volume out in this fractal or this consolidation area right here. Boom. And here's a low volume area and the VPOC. So by definition, this would be a mean reversion trade back up, assuming you were going to go long or that your trade plan said you could, and that was in your trade plan. And there will become a point at which, or there doesn't have to be, but there can become a point at which the context changes. Right? And at that point, then you need to turn the tanker around. But you don't know that point has happened until it does. So that's pretty important. Oops, what did I do here? How did that work? I don't want to do that. Yeah, so there will come a point when the context will change or not. It doesn't have to, but right now we have 3 pronounced distributions, or if you want to be real precise, 1, 2, 3, 4, 5 of them, so far today. Down. 1, 2, 3, 4, 5. And in this case, value is moving lower. We started out trading up here. Damn it. 1, 2, 3, 4, 5 distributions. Value moving lower. This is value. This is value. So we started out up here. Value is now moving lower. And one thing worth noting is there's no excess down here. Typically, you want to have some kurtosis at the ends of the distribution, right? Where it just winds out to nothing. Here, for example, winds down to taper, and the same way up here to a lesser degree. This is just blunt. There's no real taper to the downside. It kind of looks like there is over here on the book map chart, but it's pretty. Oh, I see what's wrong. Never mind. I see what I've done. You see how this is not white down here? That's because I moved the damn thing and it wasn't updating. It was frozen right there. My mistake. That happens to me frequently. I wish there was a way I could set them from doing that, but there isn't. So here we go. Okay, and I'm out of here in an hour to go get the school run, pick up the boss, and then pick up the junior boss, the vice president, pick her up at 3. And I need to put in a bunch of work today and tomorrow. I'll be doing all the forecasting and revenue recognition for the company, the other company globally. Typically, I focus on Western Hemisphere, and there's a gal that does Eastern. But it's on holiday, apparently. Well, there's kind of a light drizzle of rain out there. It's cloudy and thunder, so that's nice that this place is cooling off a little bit. This is a hotter than the second coming of Christ around here. I don't think it's as bad as Arizona, but this is Texas, Houston, Texas. Never thought I'd live in Texas, but here we are. For one more year and then skedaddle. Big mistake. One of those pivotal things where you have a not a split second, but a decision. Maybe may or may not have been based on accurate data that is so important. And it's like the branch. It's like a fork in the road, and fork in the road of your life. Pretty crazy. Well, they got back to that. If you're not partial to having a plan, or if you're okay with counter rotational trading, all of this nonsense down here, mean reversion back to the mean, that was a 10-point trade right there. Many of these lows up here. So, is this the change in context? That's the biggie. Got pretty darn close to that MCVPOC, huh? 1.5 points away. And as anybody knows in trading, close only counts in horseshoes and hand grenades, right? So nothing is precise. ES is probably more reserved when it comes to observing levels and, stopping and stuff like that. The NQ being much more volatile and a lot thinner market will, slide by levels a long way and stuff like that. It's a lot more volatile market and a lot thinner. So we are back at that 34% statistic. Yeah. And the mean reversion back to the outside in paid out 10 plus points, 12 now, depending on your entry. But what happened here? So, with hindsight, of course, you knew to do it down here. Up here, you thought it was going to happen and you got hammered. This VPOC migration down would indicate that it was going to go lower. And so you did make a little bit here, but what would be the reason for thinking it was going to rotate back up? Just outside in, I guess. Outside in is a mean reversion. Against the fact that the VPOC has consistently migrated lower all day and value is developing lower in the context of the price action today is down or lower. So taking that mean reversion long there's no way you can conceal the fact that that is just a counter rotation trade. That's a counter trend, counter rotation, counter all that stuff. Counter longevity, I think. In my view. And here we are at the VWAP. There is a structured trade in the TLab, which is VWAP to VPOC. But this is 1.5 points away. So tilt, no range, no anything else. And actually, what the hell is that? That is an incorrect VWAP, and I can tell you exactly why this anchored VWAP story they have doesn't work as I understand it should. This should be set for 25 here. I have to reset this every day in order to get that to work. Now this is going to now disappear and jump up here where it belongs, because this is the full session and that line is going to be right there when it gets you calculating up here. There you go. And then you put that on there and it says ETH. So see, snooze, you lose. That's what happens. So if I'm not totally focused on being set up last night and or earlier this morning. Right, well, last night's when I started. I shut Bookmap down every day at 14 or 1600, I'm sorry. And then I reopen it at 1700. so that each recording, Bookmap, I should mention that Bookmap has a facility, if you just click a little box, to absolutely faithfully record everything that happens in the day in the trading session, including orders, moving stops, doing anything else. And when you do the replay, it's as if you're watching real-time data. It's not jerky or jumpy or anything weird. When you're doing a replay, there's a progress bar up here. And I don't know, it might say something else. I suppose down here says replay instead of real. I don't know. Anyway, if you don't look at that progress bar, you would think it was the real market. It's a very, very good tool in that respect. So, as I said, I shut it off every day at 1600, which stops that recording, and that's saved. And then I started again at 1700, which is the ETH open, and it runs through 1600 the next day. So I have a multiple years worth of daily recordings of the complete ETH and RTH session. Of the reason I do the stream and not just rely on the book, if it is of the Bookmap recordings, is that Bookmap doesn't record audio. Therefore I need to do the stream to get the what I'm thinking part, the narration part, captured. Now we are coming up to a trade, which is a TLab trade called the IB continuation. So if we test right up here to the IB and can't get any traction over it into these levels, it is a mean reversion. And coincidentally, the IB is right at this low volume node. That could be a justified short, mean reversion short within range, and then target slower, but that is a possibility. And we've got the VWAP right there and the mid just above it and all kinds of people up here. Now, this is the ETH VWAP, which is not as significant, but this is the RTH VWAP, and this is the ETH. So there is basically an ETH VWAP, but there's the IB right in the center here. So you could conceivably lean on the two of them and short to the low and down through that liquidity at 39, 38.75 to the VPOC. There's 330 stops out above that IB, which is kind of bizarre because we didn't get above it yet. The VPOC, the IB failure or continuation trade, typically you got to trade through it. And in this case, I would want to see price definitely trade through here because there is also historically a pile of stops above the VWAP. That's a real favorite retail location. So there we got up to and tested 315 stops out just below the IB, but in my opinion, not a valid setup for a short back to the mean reversion because it didn't catch the stops above either the IB or the VWAP, which I can promise you there are a bunch. Now, shows you what I know here. I would be scaled right now, risk neutral, right? So that's all that matters. Got up there. Well, hasn't gotten up there, hasn't retested back up there to that IB stuff. And as we approach 12 o'clock, is this a signaling a change in context? Here we go. Now they took out those stops. Oops, wrong mouse. God damn. Now they got those stops and some buyers stepped in. So that would qualify essentially as a short to mean reversion. Better yet, if it had, I wasn't watching for it. Oh, it did. Okay. They pulled up here, didn't get anywhere, and down they come. So they've got absorption, several hundred contracts stopped out, and I got to change this so they get away. Well, there's 208 stops. There's some absorption. There's 310 icebergs or something like that. Will they come up here and test and then head down? Again, it's getting pretty. Oh, and that's a big low volume node right here too. Look at that. That is truly an outside in by definition, actually. Whether this will be an IB continuation or not in the direction of that trade. With the time zone coming up to 12 o'clock is a little scary for me. But that's what I was waiting for, or I was looking for, as I stated earlier, to see it get through that IB and the mid, the VWAP, and take out some of those stops. Now, if they just get up here and can't get across this and only get, 14 stops out here, that's indicative of exhaustion. And there's, it's getting kind of choppy up here, and that's making me a little bit apprehensive about that short. This would be the perfect example of me thinking that keeping a discretionary hand over vetted trades would increase my edge. For example, how would you code this situation? You got the VWAP right on top of the IB low. So this would be basically an IB continuation trade where they trade up here, they get the stops out, they don't get any place. Again, but now, unfortunately, the buyers aren't getting paid either. I mean, the sellers aren't getting paid either. But you'd have to, that would have to be a conditional statement somewhere in your qualifying code to vet that trade. That these another level had to be a further some distance away, I guess, because that's a very meaningful. It's very meaningful to me that the VWAP is just a point above the IB low, and so there's all those stops that would be associated with a VWAP up here above that, as well as there is the IB low. If you're thinking about the IB continuation back down to the mean. Yeah, maybe I'm just barking at the moon. Maybe it is. Maybe I'm too, granular or taking it too far. That's also something to think about. So we're coming up to the 12 o'clock one, and then I'm out of here at 12:20 to get the boss. That'll be great. The time of day also is relevant, in my opinion. Not the time as far as keeping, trading with candlesticks as opposed. You notice that I don't have candlesticks on my charting in IRT. It's Rinko, except for the micro composite. But certainly, I mean, obviously the open, the close. I think the 12 o'clock, 12 to 1 area is a significant time to be aware of. Now, here we do is this exhaustion. We've got 209, 214, 2830. And it still keeps grinding higher on buyers. But we are getting smacked. We are really into this low volume area up here. And the Globex VWAP or the ETH VWAP is something to say, as is the mid. Getting kind of scary right here in that this is 4 and that's 6, right? So there's just your stop just going to be above that swing high if you get in right on the IB low. And it's getting to where it's too low. How low can you go? Buyers are getting not a lot of places here, but neither are sellers. And I'd be guessing for that mean reversion back to the POC, but we'll see. For the IB continuation trade down. Now it would be scaled and running. Oh, yes, look at us go. Well, that was stupid that I didn't take that. Narrating it over and over again and then not being on it. Paralysis by analysis paralysis, is that what they call it? So we've tested down through this into this consolidation area right here. That low did pan out for there's scale. There's a scale and you haven't gotten paid. But you're risk neutral. And you're on the right side of what I believe to be context, which is south. And you got under the VWAP and the IB low, sorry. Mean below. Now, the next thing to be thinking about is a possible VPOC migration up. Well, here we are. This is 8,590 contracts. So any place up here would have to get that or more in order to bring the VPOC there. Oh, that's highly unlikely at the moment. Quite a bit of trading to do. Pretty easy to pull it up to this 72 area here, however. And that now getting back to getting back to an oops moment up here. Have to make sure I keep this thing wound in so I can keep my perspective. I get to thinking these are real big moves, and then I realize that it's 3 points from here to here. Yeah. That's only 3 points. So not a lot of conviction on that pullback. Basically, as another zipper here and a consolidation, trying to build this one, I guess. Oh boy, 55. Great. 25 minutes. Go get the boss. I'm hungry. That there's a pile of food around here because there always is, but I'm sure she'll be hungry. And we'll have a lunch together. So here we are at the big 12 o'clock. Whatever that means. I believe that another one of the things that I'm struggle with here, that I'm trying to be a real process-oriented and meticulous trader rather than just, scalping my way to fame and fortune. A lot of times I've noticed that the timing of the trade is so important. Timing of the entry, for example, like let's say the power hour, 2 o'clock or heading into 3 o'clock, 10 minutes early on the trade, stopped out, and then basically from the entry point, exactly the direction that I had been anticipated with the outcome of scale and profit in a runner. Now, what Tom, one of the things that I perhaps haven't gotten my head around is that, it's a random market. You're going to get stops a lot. So that doesn't mean anything. If you're premature on that entry and you get stopped, then you just get right back in when that setup reappears. That's easier said than done if you're on a limited, what I'm leery of is FOMO or revenge trading, like over trading. And I have a stop loss, a daily loss limit, which essentially with my target is 3 stops, right? Because it's daily loss limit I have a daily loss limit of $1,000. So that's 3 stops. Well, some of these guys are talking about taking 5 or 6 stops. And now, if you take a stop and you are profitable, if your first trade has been profitable, your first couple of trades have been profitable, and you have a greater than a 1-to-1 risk reward ratio, then taking stops is a lot easier on your psychology and also your account. And you can essentially take more, Yeah, well, if you have, let's say you have a 4-to-1 risk reward and you get 1 trade off first, you can then take 4 stops and be flat, to have your account go right back to where it's scratch. So that's a big piece of the pie, I think, is to be sure that the risk reward is substantially more than 1-to-1. Keeping in mind, though, that inverse curve, so that you're likely to have a lot more stops than you have full targets. But that's when the beauty of the of the risk neutral scale comes in, I think, because the risk neutral scale is 1-to-1. So that's the maximum probability that you could hit, basically 50-50, that you're going to make that scale. And then if you're risk neutral scale and you're holding for that 4-to-1 profit target, all those ones in the meantime that you don't make are scratch. And also then the next complicating factor to add into that is risk management in the trade, sitting there like a bird on a wire waiting for it to come back to the scratch, or as profit migrates, say instead of getting to 48 ticks, you get to 36 ticks. Are you trailing your stop up? These are all things that are, in my opinion, are what ifs, which is why I'm so keen to get a efficient And I'm hoping it's going to be Python, an efficient system for basically doing a quick back test to analyze those what if situations and the statistics around them. That's real important, the concept of the risk neutral scale. How it can impact that, because you can have a really, really higher risk reward ratio, which typically would have a much higher probability of consecutive losses. But that that probability of consecutive losses is negated because you are once you are risk neutral scaled, which is 50-50. That's a big deal. I got to remember that. That's a pretty big point, I think. Well, there we go. Now they're going to finally break it down to that mean reversion. So there you go. In effect, then, short scale. Now, this is not 48 tick target, but not to the mean reversion yet, and haven't gone lower or whatever's going to happen. So, yeah, okay. Now there's 12:10. I'm going to start the process of getting ready to go to up the boss. I'm going to throw in the Be Right Back music here. Walking bass I enjoy. And I'll mute off the mic so the cats don't start singing to you. So we're damn close, huh? And this is an example of that project management theory I was talking about, but in a well, yeah, it is, but not as maybe not as accurately. So say we're entered up here at 6, scaled at 3. Okay. Now price trades back, trades down, trades back up, bluffs around here, heads off. So do you trail up to up just above these swing highs, which would essentially be the scale? I got to think that that's better than sitting and waiting for it to come up and take you out of a scratch, I think. But that would be something that would need to be statistically analyzed. You know, how much more, how many times leaving it at your scratch, how many times does it reach target? As opposed to how many times are you taking out, you know, scratch, and then how many times does it come back to revisit the scale? They've scaled up. Oh, that's, you know, there's so many what ifs there that happen in this whole thing. Well, yeah, okay.